Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra. Well, it's the earnings season as well as the summer vacation time as well. In case you're interested in talking about holidays, that's what we're going to be discussing on this show. Joining in is a very special guest with me. With me is Mr. Kavinder Singh. He's the MD and CEO of Mahindra Holidays and Resorts India. Mahindra Holidays has just reported its quarterly results, and we've seen the company returning into profits for both on a quarter basis as well as on an annual basis as well. Mr. Singh, thank you so much for taking the time out. Appreciate you joining in on Business Today TV. Let me begin by saying it's a great quarter for you. Things are looking better after 2 challenging years of COVID-19. The worst seems to be behind us now. Could you share with all our viewers some of the top highlights from your Q4 earnings?
The best part of this quarter was that we hit our highest ever resort income at about 57 crores. And that is something that we did not expect, considering that in the month of January, we had Omicron. So despite Omicron, we delivered 77% occupancy, about 57 crores of revenues. And even at a year level, this turned out to be a great year for us in terms of resort revenues, our total revenues. So our income growth in the quarter was at about 19%. Our profits grew by about 37%. And we have also seen a margin expansion of 200 basis points. And most importantly, we added 385 rooms in this financial year, taking our resort count to 84 and our room inventory count to 4,568, crosses 4,500 mark. So this has been a great quarter as well as a great year if I were to look back. And also, most importantly, in the month of March, we had the highest ever occupancy at about 89%. April, May, June, all looking at 88, 89% for us.
Right, Mr. Singh, I also wanted to understand from you if there was any impact of Omicron on your earnings in Q4, also the rising cases in China. And was it somewhere offset with the international flights also resuming?
So for us, largely, we are dependent on domestic travel. So we did not see any impact of the factors that you mentioned. And domestic travel in India remains very, very strong. People are traveling with their families. They love outdoors. We have safety and hygiene certifications from Bureau Veritas for all our resorts are platinum rated. So we are seeing huge amount of momentum for our bookings. And we are not seeing the effect of any of the factors that you have mentioned on our business. And that's something that we must note, that our domestic leisure travel is at an all-time high in India. And we are the biggest beneficiaries of that. And the fact that we are at 80% of our resorts are at drivable destinations, lots of outdoor activities, a lot of food choices. So there's a lot that you can do while being in India. And that is something that is definitely helping our business.
Well, okay, occupancy is definitely getting better and things looking up right from the challenges of COVID-19. And also with temperatures rising back home, summer vacations also beginning. I wanted to understand from you, what is the outlook on both business and leisure travel in the summer months in India?
So if I were to look at the summer months, April, as I said, we did about 88% occupancy. And if I were to look at May and June as an extension of, let's say, the summer holidays for most of the schools in India, we are looking again at 89% occupancies in both the months. July, which is typically not a peak month, there again we are looking at 80% plus occupancies. We are not in business travel, so I wouldn't comment on business travel, but definitely on the leisure side, we are seeing a big momentum in this summer season and across all the resorts that we have in India and even in resorts abroad like Dubai as well as Thailand.
Right, Mr. Singh, could you give us some more numbers on member additions and also the resort count? What is it at and what is the target going forward? Is expansion on cards on that front?
Yeah. So member additions were very healthy at about 4,058 members that we added in this quarter, considering Omicron related uncertainties. So that's been a great number. At a year level also, we did about 12,700 odd rooms, which is a 7% growth. 12,700 member additions happened, which is a 7% growth over the last year, same time, considering we had 2 waves. So this has been a great year for member additions as well. And our total member count now stands at 2.66 lakhs, Multiply that by 3 to 4 members per family. We are talking a million cohort that travels through our resorts. If I were to look at the number of resorts that we have added and are adding in the year that went by, we added destinations like Leh, Shillong, Pushkar, Daman, and most importantly, 3 international destinations also got added, which is Bali, which is Pattaya, and the other one is Bentota in Sri Lanka. So we have now got a very large number of resorts, of course, in India, 73 of them and 11 overseas. I'm not counting the holiday club resorts which are there, which are in Scandinavia, which is also our company. Having said that, the plans ahead are even more exciting. If I were to look at the near-term plans, we have a huge expansion going on in a resort, which is in a place called Kandaghat, just before Shimla. We are adding 185 rooms to an existing 75-room resorts at an investment of about 200 crores. And we are also going to start the Greenfield project in this quarter in Ganpati Phule, which will be another 250 crores investment, 235 rooms. Our existing resort in Puducherry will further go expansion, 60 rooms with 65 crores will be the investment. And likewise, we have lined up many more additions to our resorts in many more destinations. So we have a plan to do about 1,200 crores odd capital investment over the next 3 to 4 years. We are on track to hit 5,500 plus rooms in about 2 years' time. We are already at 4,568. This is something that we had set out, and we are well on our way.
Right. Now, Mr. Singh, I also wanted to understand from you, a big part of your revenue stream really comes from the annual membership fee. How has this changed post-COVID and with uncertainties creeping in? Is there a change in trend, and what is it?
So the good news is that, because, and inflation is, of course, the unfortunate part, but, for us, because in our case, there is a membership. We are in a membership business. People who are our members, they actually do not get affected by the inflation. There is a minor implication that they have for the annual fee. But as far as rooms are concerned, they don't have to pay because they are paid the membership fee. And that is why we will see a good tailwinds towards new member additions. As far as annual fee is concerned, people are paying regularly because they are holidaying. And they realize that by paying a small annual fee, they are able to actually, in some manner, beat the inflation by going into our resorts and staying then and using their 7 nights or 8 nights or 9 nights, whatever they have. And that actually helps them to save a lot of money. So for us, the annual fee income as well as the collections have been very robust. Our cash position stands at now 1,172 crores. We added 232 crores of cash during this year.
That's right, Mr. Singh. Also wanted to understand a little bit deeper on the occupancies front, since you've been saying that Q4 was definitely much better. You expect occupancies to rise even further in the April to June quarter, which is the current quarter as well. But have occupancies really reached the pre-COVID levels? If not, by when do you really see them reaching the pre-COVID levels?
So if I were to look at our performance in Q4 as well as in the full year, our performance at least on parameters like resort income, profits, margins, we are anyway beating the pre-pandemic levels. If I were to look at April, May, June, definitely we will beat the pre-pandemic levels this quarter on all count. And I think the pandemic period is behind us, hopefully. The pre-pandemic period also will be scaled up, because please note that we also added 850 rooms in these 2 years. Our room count has grown. So we are anyway, during the pandemic, actually have seized the opportunity to add rooms. And that is helping in our resort incomes. That is helping in getting our more members and getting our top line moving forward, as well as, of course, through the margin expansion route, we have been able to move our margins as well.
Right now, Mr. Singh, as we also understand that Mahindra Holidays is going to be raising its stake in Rockspot in 3 tranches. Could you give us some more details on this front? What is the timeline for this increase in stake? By how much will you be raising this stake? And also, if you could give us a sense of the earnings visibility with this higher stake in Rockspot.
So please remember that Rockspot is a startup. This is actually in the business of providing soft adventure experiences to the families in various cities. We saw an opportunity, and during the pandemic, we put in about 7%. We bought 7% stake in the startup, and actually the synergy that we see is that they are building a lot of unique outdoor experiences through the theme adventure park. So we are creating, normally there is a standard adventure like zip lining, etc. Then we are trying to create a theme-based adventure, soft adventure for the entire family. So 3 of our resorts have been already done with the help of Rockspot. So the idea is to use their strengths to create new experiences for our members and also target their customers for becoming our members. So that's the idea of Rocksport. We are going to increase our stake to about 24% in 3 tranches, and that will all happen by September of this year. And that actually gives us a great synergistic route to build new experiences for our members. And as far as profits are concerned, it's not significant, but what is important is the synergy that we are going to derive from each other to grow their business as well as, of course, our business.
So, Mr. Singh, are there any mergers or acquisitions on the cards as well, both domestically or internationally?
So as far as the acquisitions, I've been mentioning that we are on the lookout. There are some interesting opportunities that are on the horizon. You will definitely hear from us soon. We are looking at leisure properties, and the good news is that the properties are in India, and there is a huge traction in the locations that we are looking for. You know that we look for properties which are open, larger rooms. So such properties are rare, but we definitely have something on the horizon, and we should let you know soon.
And last question to you, Mr. Singh, I wanted to understand from you, what is the growth outlook that you see for FY23? Is there going to be more business or leisure travel going forward? Also, which geographies are you betting most on going forward from here?
Yeah, so if you were to look at our business outlook going into FY23, first quarter has begun well. We are very confident that this quarter will be a very good quarter, as I mentioned, because of the higher occupancies, the movement in the membership business, and the fact that we are also learned some lessons during the COVID, and we are far more cost effective than we used to be. So I definitely see FY23 to be a very, very, even a better year than FY22. Okay. And of course, in the holiday club resorts also, we have seen that they have hit the break-even EBITDA. There's again a positivity there I can see. So our outlook is very positive for even holiday club resorts. So even at a consolidated level, where we have shown significant movement. By the way, we had the highest ever consolidated profit after the new accounting standard came. So I think we will beat that number. So we are very confident of moving into the future, largely because the tailwinds are in favor of leisure travel, and also the business model, which is proven, and the resilience of the business model is even proven during the pandemic times.
Well, on that note, thanks a lot, Mr. Singh, for joining us on Business Today TV and sharing the earnings fine print with all our viewers. All the very best to you for your future quarters.
Thank you. Thank you, Sakshi.
If you like the video, do like, comment, share and subscribe.